Tax season, it's that time of year. Some of us dread it. Some tackle it head on. We gather everything, crunch the numbers, and then click Submit e-file. But what actually happens after that click, behind the digital curtain? Today, we're taking a deep dive into the IRS e-file program. It's, well, surprisingly complex. We've got a stack of IRS sources here, covering everything from who must e-file, the mandates, to how identity thieves are trying to game the system, which is frankly a bit scary. Our mission, to give you a real shortcut to understanding the system that, let's face it, affects almost all of us.
Yeah, and what's really remarkable when you look at the sources is just the sheer scale of it. We're talking about a system processing over 86% of U.S. tax returns electronically. Think about that volume. And the layers of rules. They're not just for ticking boxes. They're fundamentally there to protect taxpayers, yes, but also the integrity of the whole financial system. And honestly, some of the rules and the thinking behind them might make you go, huh, okay.
It's definitely not just about integrity, though. It's also about massive efficiency gains, right? The IRS pushes it because it's faster, fewer errors than paper.
Absolutely. Way fewer data entry mistakes on their end. Much quicker processing overall.
But, and this is key, that speed doesn't mean less responsibility for the taxpayer. You're still the owner of that info, still responsible for accuracy, for filing on time, just like the old paper days.
Exactly. It's a powerful tool, no doubt, but the responsibility remains squarely with the taxpayer.
Okay, so the IRS wants digital. Are they actually forcing hands here? Let's unpack who has to e-file and who, maybe surprisingly, gets a pass.
That's a great place to start. They are definitely pushing it. The main mandate falls on paid tax preparers. So if a preparer handles more than 10 individual income tax returns in a year, and that covers individuals, trusts, estates, they generally have to e-file those returns.
More than 10, okay.
And there's also this aggregate firm rule, which is important. If a whole firm prepares 11 or more of these returns combined, then basically everyone in that firm usually has to e-file what they prepare.
Yeah.
Even if one person in the firm only does, say, 5 returns themselves, it's about the firm's total volume.
Okay, so it's a push for the whole practice to go digital if they hit that threshold. But there are always exceptions, aren't there? Who gets out of this e-file mandate?
There are a few interesting ones, actually. Foreign preparers without a Social Security number, for instance. The system just isn't set up for them.
Makes sense.
Also, fiduciaries, people filing for trusts or estates in that specific capacity, they aren't typically considered tax return preparers under this rule, so they're exempt.
Okay.
And then there's the religious exemption. It's quite specific. If a preparer is part of a recognized religious group that conscientiously objects to electronic filing, they don't need a special waiver. They just attach a specific form, Form 8948, to the client's paper return, checking the box explaining why.
Huh. That's interesting. What about returns that just technically can't be e-filed, like the system can't handle them?
Yeah, that happens too. Some returns are just impossible electronically right now. Things like really old amended returns or individual returns with fiscal year ends, which are super rare anyway.
Right.
Also, returns with certain forms or schedules that the e-file system can't process yet, or ones with really unusual processing needs. And notably, estate tax returns, Form 706, those are still strictly paper.
Right. Shows that even with the push, some things are still catching up.
Yeah.
So, okay, if you do need to e-file, or your preparer does, how do they even get started? What's this e-fine thing? Sounds important.
It's absolutely crucial. An EFIN, electronic filer identification number, is basically the preparer's digital key to the IRS e-file system. You must have one to start.
Okay, the key. How do you get it?
Well, the application itself is free, but it's not instant. You can take up to 45 days. You start by creating an IRS e-services account, providing personal info. And the eligibility is pretty strict. You need to be a U.S. citizen or green card holder, at least 18, and meet all your state and local licensing or bonding rules.
45 days. Wow.
And there's a background check component. They brought in electronic fingerprinting, live scan, they call it, for new principals or responsible officials. Unless you're already like a licensed attorney, CPA, or enrolled agent, that streamlines it a bit.
Sounds pretty thorough. Anything else to know about that application?
Yes, critically, when applying, preparers need to list all the form types they might ever want to file electronically, like 1120s for corporations, 1065s for partnerships, 990s for nonprofits.
Even if they don't plan to right away.
Exactly, because if they don't list a form type on the application, any attempt to e-file that type later will just get rejected. They'd have to update their application.
Wow. Need to think ahead.
And another key thing for taxpayers to understand. An EFIN isn't transferable if the practice gets sold. The new owner has to get their own EFIN. Plus, an e-file is tied to a specific location. So if a firm has, say, 3 offices all transmitting returns, each office needs its own separate EFI.
So the IRS knows exactly where each e-file is coming from. Very precise. Okay, so they get the EFI, then they often become an ERO, electronic return originator. What's that role about?
Right, the ERO. That's the authorized provider who actually originates the electronic submission of your return to the IRS. Now, many EROs also prepare the returns, but the ERO function itself is specifically about that transmission step.
And what are their main responsibilities as an ERO?
They've got quite a few. Timely submission is key, obviously. Getting you a copy of the return, keeping records, detailed ones for each return filed, and making them available to the IRS if asked. If a return gets rejected, they're the ones who need to work with you to fix it. They also have to make sure the preparer's info name, address, PTIN is entered correctly. And, importantly, they're expected to be diligent, recognizing potential fraud, reporting it, preventing it, cooperating fully with any IRS investigations.
Kind of like a gatekeeper for the system, then.
Very much so, a crucial gatekeeper role.
Okay, so the ERO submits it.
Yeah.
But how do you actually sign it electronically? It's not like signing a tablet, right?
Right, not a literal signature on the screen. It uses a PIN-in, a personal identification number, to meet the legal signature requirements. There are basically 2 main ways this happens. One is the self-select PIN. For this, you, the taxpayer, provide authentication info, usually your prior year, adjusted gross income or AGI, or maybe the PIN that you used last year. If you enter your own PIN directly into the software, it can be completely paperless. But if the ERO enters the PIN for you, you still have to review everything and sign a separate paper authorization form first.
I see. What's the other method?
The other, and probably the most common one preparers use, is the practitioner PIN method. This one doesn't need your prior year AGI or PIN. Instead, you sign a specific form, Form 8879, the IRS e-file signature authorization. That form includes your consent, but also what's called a jurat. That's basically a legal statement where you swear the information on the return is true.
Form 8879. Got it. So whether it's self-select or practitioner PIN, how does the preparer make sure it's actually you authorizing it, especially if you're not sitting right there?
Great question. The authentication is serious. If you're there in person, the preparer has to look at a valid government photo ID driver's license, passport.
Right.
Compare the picture to you, record your name, social security number, address, date of birth. A credit check is optional, but the ID check is mandatory.
And if it's remote, like online?
For remote transactions, they need to verify that personal info name, SSN, address, birth date, against info from independent sources, like record checks with agencies or credit bureaus.
Okay.
And here's a really important point. Just signing that Form 8879 by hand and then faxing it or emailing it or uploading it, that does not count as a valid electronic signature for a remote transaction according to the IRS.
Ah, good to know. So scanning a signature isn't enough for the electronic signature process.
Correct, for that specific remote e-signature path. And this whole identity verification thing, it has to be done every single year. If a preparer tries 3 times and still can't verify your identity through these methods, they have to stop and get a traditional handwritten signature on a paper return instead.
Wow. They really nail down that verification. Seems like a lot of diligence.
It is. It's all about system integrity and fraud prevention right from the start.
Okay, which is reassuring. But things still go wrong sometimes. What happens if an e-filed return gets rejected by the IRS? It's not just like, oops, try again, is it?
No, definitely not that simple. There's a clear protocol. If a return gets rejected, the preparer, usually the ERO, has to let you know within 24 hours. They need to give you the IRS rejection codes and explain what they mean, what went wrong.
Okay.
Now, if you decide you don't want to fix it and try e-filing again, or if it just can't be accepted electronically for some reason, then you must file a paper return instead.
Right. Which brings up the deadline question. If it gets rejected near the deadline, what happens? Do you get extra time?
Yes, that's where the perfection periods come in. It's basically a grace period the IRS gives you. It lets you correct the errors that caused the e-file rejection and resubmit it electronically without a late filing penalty.
How long is that grace period?
It depends. For business returns, it's 10 calendar days from when the IRS notifies about the rejection. For individual returns, like your 1040, it's shorter, just 5 calendar days.
5 days. Okay, not a lot of time.
Not a lot. And if you do end up having to file on paper after a rejection, there are very specific steps. You have to attach an explanation saying why it's being filed on paper after the due date. You need a copy of the IRS rejection notice and a little summary of what you did to try and fix the e-file.
Okay, documentation.
And you should literally write in red ink at the top of the first page of the paper return, rejected electronic return, and the date of that first rejection.
Red ink. They're serious.
They want it to stand out. And, crucially, that paper return needs your actual handwritten signature, the pen you used for the failed e-file attempt. That doesn't count as a signature on the paper form.
Got it. Handwritten signature required for paper.
One more detail on rejections. If a return is rejected right on the due date, any electronic tax payment set up with it should not be resent with the corrected return. The payment itself still needs to be made or postmarked by the original deadline, regardless of the return rejection.
Good tip. Handle the payments separately if you're up against the clock.
Exactly. Oh, and at one point about resubmitting rejected individual returns. If the corrections are minor, specifically, if the changes don't shift total income or AGI by more than $50, or things like total tax or refund by more than $14, then the preparer can actually correct and retransmit it without needing a whole new signature authorization form from you. Saves a step for small fixes.
Okay. Thresholds for minor changes. That makes sense. This is a lot of detail to manage. Shifting gears slightly, what about how these e-file providers advertise? I imagine the IRS has rules about that too.
Oh, absolutely. Very strict rules, again, focused on protecting taxpayers from being misled. Firms can say they are an authorized IRS e-file provider. That's factual.
Yeah.
But they absolutely cannot use improper or misleading advertising. A big one is promising refunds by a certain date. That's forbidden. They can't guarantee IRS processing time.
Guarantees.
And they can't use the official IRS logo, the eagle symbol or any IRS insignia. They can't imply they have some kind of special relationship or inside track with the IRS. They're allowed to use the specific IRS e-file logo, but even then, it can't be combined with the eagle symbol or words like federal in a way that might suggest, an official endorsement or partnership beyond just being authorized to e-file. Basically, no treasury seals, nothing that implies they're part of the government or have special pull.
Transparency is key.
Yeah.
Makes sense. And if they advertise fees...
If fee information is included in their ads, they have to keep copies of those materials for at least 36 months after the last time they used them or transmitted returns based on them. Record-keeping requirement.
Got it. Okay, now, this next part feels really critical for everyone listening. Protecting taxpayer data. You mentioned preparers need to be diligent, but it's more than that, right? It's the law.
It is absolutely the law now. Federal law requires all tax return preparers to create, implement, and maintain a data security plan. It's often called a WSP, a Written Information Security Plan.
A WSP.
And failing to have one isn't just bad practice. It could lead to an IRS investigation. And if there's a data breach because they didn't have adequate safeguards, they could face serious penalties for unauthorized disclosure of your data.
Wow. So the onus is really on the preparer to lock things down.
Hugely. They're essentially custodians of incredibly sensitive financial information. The law reflects that now. And on the taxpayer side, the IRS offers the Identity Protection PIN, or IPPN.
Right. You mentioned that. How does it work again?
It's an optional 6-digit number that any taxpayer can now request. It's an extra layer of security against identity theft when filing. The IRS mails you this number on a notice, a CP01N notice. You use that specific PIN when you file your return electronic or paper.
So it proves it's really you filing.
Exactly. It helps the IRS verify your identity. Quick note for joint filers. If both spouses have an IPPIN, usually only the primary taxpayer, the first person listed on the return, needs to enter theirs.
Good to know.
But, important point, if you get an IPPIN and then you lose it, and you have to file a paper return because you can't e-file without it, expect delays, significant processing delays.
Ooh, don't lose the PIN. Is it the same PR every year?
No, that's key. Each IPPIN is only valid for one tax year. The IRS issues a new one each year.
Okay, so it's an ongoing thing if you opt in. This really highlights the identity theft issue. It's not just a minor concern, is it? How big is this problem?
It's enormous. Identity theft generally is using someone else's personal info name, social security number, without permission for fraud. In the tax context, you see things like employment-related identity theft, where someone uses your SSN to get a job.
Right.
But the massive issue, the one that's a top IRS priority, is fraudulent refunds, stolen identity refund fraud.
Their
scale is just staggering. A recent IRS report estimated that in just one tax year, criminals attempted around $30 billion in this kind of fraud.
$30 billion.
Attempted. Now, the IRS systems caught a lot of it, but they estimated about $5.8 billion was actually paid out fraudulently. And the true loss might be even higher because some fraud goes undetected.
That is absolutely shocking. 5.8 billion paid out.
It tells you why safeguarding data is paramount and why the IRS has these strict rules, like requiring a preparer to have a valid power of attorney, Form 2848, on file and authenticate your identity before IRS staff can even discuss a potential fraud issue related to your account with them.
It makes sense now seeing those numbers. So how are the criminals actually doing this? How are they getting the information?
The vast majority of these tax-related ID theft schemes are initiated online, often using fake emails, spoofing where it looks like it's from a legitimate source but isn't.
Phishing emails.
Exactly. Which leads to the most critical takeaway for listeners. The IRS does not initiate contact with taxpayers via email, text messages, or social media to ask for personal or financial information. Full stop. If you get something like that, it's a scam.
Okay, everyone hear that? IRS won't email or text you asking for your info.
Never. And we're not talking about small-time crooks here. Many are part of sophisticated, high-tech, global organized crime rings. They also use social engineering, which is basically manipulating people through human interaction to get information.
Like smooth talking their way in.
Sort of. Pretending to be someone they're not, a new employee or a repair person, someone needing help, maybe even showing fake credentials. It's about exploiting trust to bypass security.
Sneaky. And dangerous.
Very. And since preparers have to collect and store all this sensitive client data, they are prime targets, which loops back to why that WSP, that security plan, is so vital.
So what can preparers do specifically beyond just having the plan?
The IRS offers suggestions. Definitely confirm identities and taxpayer ID numbers, or TINs, for everyone on the return. Use photo IDs for identity, but also ask to see Social Security cards or other official documents to verify the TINs themselves.
Double-checking everything.
Right. They also suggest filing returns as early as possible for clients. And using e-file itself is helpful because you get notified much faster if someone else has already filed a return using that Social Security number, a clear sign of identity theft.
Ah, e-file gives faster warnings.
Yes. And finally, preparers should probably manage client expectations. Let them know that refunds might take a bit longer in coming years because the IRS is adding more security checks on their end to combat this fraud.
A necessary trade-off, it sounds like. Security is slowing things down a bit.
It seems to be, yes. A small price for better protection against billions in fraud.
So, wrapping this all up, what does this deep dive mean for you, the listener? We've gone through the mechanics of e-file, the rules, the mandates, but also these really critical security measures and the threats they're designed to fight.
Yeah, if you connect the dots, you see this ongoing digital evolution in taxes. It brings speed, it brings accuracy, which is great, but it absolutely demands constant vigilance from the IRS, from preparers who need robust security, and frankly from taxpayers too, being aware of the threats.
So hopefully you feel better equipped now. You understand more than just the headlines. You get the mandates, the detailed processes, that whole hidden battle against ID theft happening behind the scenes. It really comes down to being prepared, being precise, and ultimately being protected in your financial dealings. So here's a final thought to chew on as we finish up. We talked about current tech, but looking ahead, with things like artificial intelligence and machine learning getting so much more powerful, how do you think the IRS might start using those tools? Not just for faster processing, but in this ongoing fight for both convenience and absolute ironclad security in our digital tax system? What could that look like? What new challenges or innovations might emerge there?